Get. Hurt. Together. Everyone say now. Together. Yeah, absolutely. To get her. Together. To. Get. The. T-H. Ladder.
Hello, Mr. Ali. Can we start the program?
Number 11, triangle. Limber. L, I, M. Very good. I எங்க நீ இங்க புள்ளி வைக்கிற Cat. இது கார். கேட்க்கு ஈ வரும். Cat. Why? Carefully. Careful இல்ல carefully. Number 13. Lift. Very good. என்னம்மா தாத்தா இங்க தாத்தா shadow field right baba car yeah L-I கல்வியது எடுத்துக்கான எடுக்கால கிட்ட வாங்கல F-L-I தவக்கா தவக்கா F-L-I-E-D field. F-I. F-I.
Dr. Karupia, what do we do? We've gotten no
Now you
direction
can
to start.
start it. Now you can
Sorry?
start it. We are 3 here now. It will go for half an hour. If anybody joins, let them join.
So can we go ahead with the presentation?
Yeah, we can go ahead. Yeah.
Okay. So my name is Abdul Ghaffar Muhammad. I am slated to be the moderator of this session. So I believe I have a presentation. I am the first on the list. So I suggest you should start since you're already in. So is on effect of corporate income tax on investment decisions of Indian manufacturing firms. And I believe your affiliation is Madras School of Economics, India. So please, you can go ahead, sir.
Oh, I can start first. Okay.
Yes, you should. Yes, you can go ahead.
Yeah. Give me a minute. That slide is getting loaded.
It's okay. It's okay. It's okay.
Yeah. Good evening to Mr. Mohammad and Mr. Saleh. Here I am presenting the paper, Effect of Corporate Income Tax on Investment Decisions of Indian Manufacturing Firms. It is co-authored by me and Dr. K.R. Shanmugam from Madras School of Economics. Both are from the same school, and it is in India. And the objective of the study is to analyze the effect of corporate income tax on investment of manufacturing firms in India using the panel level data, the firm level data for the period 2005 to 2019. And one more objective is to study the effect in the pre-economic 2008 economic crisis period and post-economic crisis period, and compare the results in this one. And this one, that it is proven that all taxes except lump sum tax leads to deadweight loss, and this happens through distorting the input price and return to market activities, which is the channel is through alteration of the household choices on labor supply and the enrollment in education, and by affecting the firm's incentives to invest and give remuneration to their employees. So that specifically when it comes to tax on capital, that is tax on capital income, that includes this profit of the manufacturing firms. This tax on capital leads to alteration in the capital structure and location decision of the firms, and the profit shifting of firms through transfer mispricing. And another one thing that they choose the investment decision based on the tax rate prevailing in the various countries. Most of them like to shift it to the low tax jurisdiction. In this one, through transfer mispricing, they are showing more profit in the low tax jurisdiction, and their productivity also shown more to be in the low tax jurisdiction. This also leads to unfavorable balance of trade for a country, for larger countries with smaller low tax jurisdictions. And it is proven that corporate tax avoidance leads to inefficiency in the use of investment, that capital. So these are the negative effects of the corporate income tax on the capital income. And this one, that there are 3 types of empirical studies available in this area. One is the Q theory framework, another is user cost approach, and another is the natural experiment approach. The Q theory framework is more suitable only for the firms which are listed in the stock exchanges. This theory assumes that investment happens to the equal to the value, that is share value in the stock exchange, that traded trading markets. The user cost approach is assumes that the firms invest until their current value of the future income flow is equal to the cost of the capital per unit of the product of a year. The natural experiment approach is more of an empirical study which doesn't have any set framework. It exploits the tax reforms that are happening in the country. Suppose a country within the country, suppose if there is a reduction or an increase in the tax rate, that is studied through the natural experiment approach, and the effects are studied one. And among them, the user cost is the most popular one among these three. And this one, that in the Indian context, there is no study, to the best of our knowledge, there is no empirical study on this particular topic. So ours is the first attempt to analyze the effect of corporate income tax on the investment decisions of the Indian manufacturing firms. And due to paucity of time, which is allotted 12 minutes, I just skip through the empirical literatures, which the literature review. And our study is mainly based on this paper, Savick and Miryuzin, 2008. It uses the farm level data for ASEAN countries for the period 1990 to 2014. And it studied the panel data for 7.9 lakhs from nearly 8 lakh firms. And they study both the static and dynamic effect of the corporate income tax on the total factor, that investment decision. They measure the effect of tax in terms of the average effective tax rate, which is tax paid as a ratio of the profit before tax. We use the same framework, and the Swellness Arnold and all, that is for the OECD countries, that is a cross-country study like Savick and Miryuzin. And among these studies, that Galindo and Bambu, that is the only study which covers India also, but it is not an Indian specific study. It studies the effect of corporate income tax on the investment for 42 developing countries. And it uses the statutory tax rate, but whereas we use the average effective tax rate like Savick and Miryuzin. Okay, natural experiment, as already told, that they exploit the effect which happens through the tax reform. There are studies that are country specific for USA and other countries. And the latest one is Kim and Park, they study for the Japanese manufacturing firm, and they found that tax reduction is boosting the investment. This is our empirical model. In this one, that investment is the dependent variable, and the main variable of interest is tax, which is T in this one. That is measured as a ratio of tax paid to the profit before tax. And other variables, the control variables, are depreciation and deduction ratio, interest expenses, cash flow, leverage ratio, R&D expenditure, age and size. The depreciation is measured as a ratio, that depreciation claimed in the books by the corporate firms as a ratio of the cross fixed assets. And this one, that deduction is the capital asset that is deleted in the balance sheet because of the obsoleteness and outdated nature of the machineries, plant and machinery. Interest is measured as a ratio of the average debt. The average debt is measured as the opening balance of debt and the closing balance of the debt. Cash flow also measured as a ratio of the average cross fixed asset. It is measured as average the ratio of cross fixed asset. And the leverage ratio is the debt to this one total asset ratio of debt to total assets. And R&D expenditure we have measured as a expenditure of the firm on R&D as a ratio of the total expenses. Then we have age, that is the age gap, the years of gap between the incorporation year and the current year. Size is measured as in terms of log of net sales, which is real sales, which we have used. And this is a two-way panel fixed effect model where we have captured the firm specific effect and the time specific effect. And the rest of the one is that error term. And this alternative specification in this one, we interact the tax variable with the size and the tax variable with the age, and we study the effect. And one more that objective already I told you, we split the sample into pre-economic crisis period and the post-economic crisis period, and we compare the result. And our data sources that annual financial report filed by the firms, that is captured by the Provost database, that is database of the Center for Monitoring Indian Economy, and the data period is 2004 to 2019, and this database is specific to Indian corporate firms, and it doesn't cover any other countries for data. And for manufacturing firm, it has list of 17,000 firms, but that data is not available for all the years, because it is not compulsory for the firms to file P&L with the register of the companies. So some of the years data are missing, and there are some entry and exit of the firm. And we computed average of certain variables like average debt, average cash fixed asset. That also leads to some loss in the 1 year. So ultimately, our data period comes to 2005 to 2019. The result as a result we get for 11,770 firms, and the number of observation is 79,387. And we have removed that, cleaned for outliers using Magalnobi's distance method. And this is the descriptive statistics. Among the descriptive statistics, I like to draw your attention only to this average of that effective tax rate, which is for the full sample it is 16.97%. And for the pre-crisis period and post-crisis period, if you see the pre-crisis period, it is 14.48, and in the post-crisis period is 17.71. In India, the average tax, statutory tax rate is 33 to 36%. If we compare this one, this average effective tax rate which we have now is only nearly 50% of the statutory rate that is prevailing in the country. And we also study the effect across the public and private firms and foreign firms. We are using the dummy variable for in this one. And if you see this percentage of the firms, it is dominated by the public firm rather than the private firm. Private firm is only 1/4. Foreign firm is very meager. So it's mainly dominated by the domestic firms, which are public and private limited companies. And our results show that the tax, average effective tax rate has some negative effect on the total that investment which is made by the firms. It comes to 0.052 in the first column, which doesn't have any interaction terms. And if you come to the second column, we interacted with tax and age. This leads to higher effect of the tax on the investment distance, so that investment level. But net effect is the same as that of the first column. It is around 0.052. And that if you see that interaction term, tax and age, that is resulted in a positive effect. It shows that with increase in the age, that average effective tax rate increases. When it comes to size doesn't have any significant effect on the investment of the firms. And other variables, if you take depreciation, deduction ratio, those two have a positive impact. And to surprisingly, cash flow ratio doesn't have any significant impact on the investment. And leverage ratio, as expected, it has a negative impact, and R&D expenses has a positive impact on the investment. And if we see that the elasticity for all these for columns, it ranges between 0.078 to 0.084. It means for 1% increase in the average effective tax rate, the investment comes down by roughly 0.08%, which is very minimal compared to other studies which we have reviewed. And one more important thing that paper which we base, Civic and Medjune found positive impact on tax on the investment. They explained that it may be through that tax revenue support the investment, but in our case it's negative only, but that the effect is very meager. And if we see that that interaction of public and private limited, which is that for a public limited, that effect is low compared to the private limited companies. The foreign company, though it is very high, it is insignificant. And if you come to that split sample, which is for a pre-crisis period and post-crisis period, we found that a higher effect in the post-crisis period compared to the pre-crisis period. This is the most major findings which we have found in our study. And that impact that the policy suggestion is that there is a negative impact of tax, so it has to be kept at a moderate level. And in India recently there was a tax rate cuts. We find that it is a justifiable one, and the depreciation related deduction needs to continue, and more support needs to be given to the private firms and aged firms to boost the investments. These are from our side. If you have any inputs or questions, you are welcome. Thank you so much.
Dear Abdul Ghaffar, please open your meeting.
Okay, Dr. Karupia.
Yeah.
That's a very wonderful presentation. Mr. Mugahid, do you have any question, please? Okay, so Doctor, I think it's a very, very wonderful presentation. I thought I have a little question, maybe one or two. In the process of the discussion, you did mention that you studied the effect of corporate income tax on investment decisions of Indian manufacturing companies. You did say you studied the total manufacturing companies. How did you draw your data regards, how were you able to study the totality of about 17,000 manufacturing firms, as you said?
No, I couldn't get the question. How did you?
Okay. You said in the course of the presentation, the population of your study was the total manufacturing companies in India. Is that right?
It is not total. It is the 17,000 firms is the available in the database. The total manufacturing company may be much more higher.
Okay, much more higher. So please, what recommendations are you actually giving? Looking at the corporate income tax, are you suggesting that the corporate income tax, like the government should bring about more regulations that are going to increase the corporate income tax, or the otherwise?
No,
regarding
increase in corporate income tax may lead to reduction in investment. And that, recently there was tax cut in the Indian in India, and we find it is justifiable one thing. And our the recommendation is that as the depreciation has more positive impact, we want more depreciation related deductions for enhanced depreciation. Those things will push investment more, and we expect more support for the private firms so that their negative effect comes down.
Okay, okay. Thank you very much. A very wonderful presentation. Thank you very much.
Thank you. Thank you.
Yeah. Thank you. So going to the next presentation, it's more of like a number of participants are not available. So I think we'll go to Dr. Mugahid Saleh. So from Kuvempu University, India. And I think the topic of discussion is going to be drivers of social media adoption among SME in Sana'a and Aden governorates of Yemen. Please, you can go ahead, Doctor.
Yes, sir. Thank you. Let me share my slides.
Okay.
I hope my screen is visible.
Yes, your screen is visible. Very, very visible, Doctor.
All right. Thank you.
Okay.
My name is Mujahid Saleh. I am from Yemen. I'm a research scholar here in India. My co-author and my research guide is Dr. Manjunath Kehar. Our topic is about adopting social media among small and medium enterprises in 2 cities in Yemen, which is Sana'a in the north of Yemen and Aden in the south of Yemen. Yemen is an Arab country. It's located in Saudi Arabia, between Saudi Arabia and Oman. It's in the Gulf area, but it is not a Gulf country due to economic and political reasons. It is classified as one of the least developed countries according to the World Bank and the United Nations. It was established as a republic in 1990. Before that, it was about 2 republics, one in the north and one in the south of Yemen. More than 90%, or more exactly, according to the World Bank, 95% of the business sectors in Yemen falls in the category of small and medium enterprises. So small and medium enterprises as a major or a significant component of the business sector in Yemen needs attention or support or like more effort by the government or the concerned parties. And doing this research is one side of attracting the attention towards small and medium enterprises as a major component of the economy. This study is a descriptive and analytical study in nature. It aims to investigate the factors that induce or drive enterprises to adopt social media in their business process. Also, it aims to identify the extent of social media use among these enterprises in Yemen. The study relied on primary data collected from 330 enterprises, and they are like from 2 cities in Yemen, in the Sana'a and Aden. The sampling method used was non-probability sampling method due to geographic and other reasons. And this led to hypothesizing that SMEs in Yemen do not show high agreement towards the drivers of social media use. Also, SMEs in Yemen do not find social media platform feasible to promote their products and services. Third hypothesis is that there is no significant difference in terms of social media use among SMEs when they are tested or evaluated by demographic variables. Also, the drivers, the same hypothesis, but related to the driver of using social media. The scale that was used in the questionnaire, I mean, the data was collected by self-administered questionnaire. The scale used in the questionnaire was adapted from these like studies in Blonde, which is part of it is exploratory investigation. For the analysis of the data, like they were coded in the power of like a 5 Likert scale, starting is strongly disagree, which coded by -2, and strongly agree, which was coded by 3. The data analysis is in 2 parts: analysis, descriptive analysis, and inferential analysis. The descriptive analysis is for the their demographic variables, which can be seen here, like from the cities, like almost like majority in the north of Yemen, and as for the field, majority are in the trade sector. For the age of enterprises, majority are less than 1 year old, and for the scope of operation, more of them are in domestic scope of operation. For the first descriptive part was like enterprises were asked like, what social media do you use in your, like for your business purposes? So the majority are using WhatsApp and then Facebook by 36 and 34% respectively. And the least social media use was YouTube. So for the descriptive statistic as well, for the scale used in the questionnaire, higher agreement was observed among the these items, like in this color, in regards of speeding communication with clients, also in cost saving, building awareness among products, like about products and services, for better targeting of messages as well, and facilitating advertising activities, and staying on top of industry news. These were highly agreed upon by enterprises, while in the orange color are the least agreed upon, which are to change, like using social media to change customer behavior and for increasing sales to existing customers, which is surprisingly different from the literature, and using social media to recruit, or like manpower, or for recruiting purposes. For analyzing the the variance analysis was in two parts. The first part was for the social media used among enterprises, and the second part is for the drivers of social media adoption. So for social media use, because the data did not follow a normal distribution, so we used non-parametric tests. And here, Mann-Whitney test were used in two variables, and Kruskal-Wallis test was used in the where are there more than two categories. So there was no significant difference among enterprises in two cities while in adopting or in using social media, as p-values was much higher than 0.05. While in the other variables, which are field of enterprise, age of enterprises, there is a significant difference in the social media use among these enterprises, because p-value was found less than 0.05. The same thing for the last two variables, scope of operation and number of employees. So when these enterprises are categorized based on these variables, there was no significant difference found in using social media, which are WhatsApp, Facebook, Instagram, Snapchat, Twitter, and YouTube. More than like LinkedIn was not mentioned or even picked up once. For analyzing the variance based on the drivers of adopting social media, a non-parametric statistical test was used, and Mann-Whitney test was used to find the significant difference among enterprises in the two cities, and the result was that there is no significant difference, as the p-value was higher than 0.05. Kruskal-Wallis test was used also to identify the significant difference in the drivers of adopting social media in the other four variables. The first one is field of enterprise, age of enterprise, and scope of operation, and lastly the number of employees. And in all these variables, there was significant difference between these variables, like in between the drivers of adopting social media for business purposes, as p-values were found less than 0.05. To summarize, WhatsApp and Facebook are the most used platforms among enterprises, while YouTube and Snapchat were the least used. The results also show a low attitude of owners and managers of these enterprises towards using social media platforms in changing customer behavior, fostering the recruitment needs, and higher attitudes were observed towards adopting social media platforms to facilitate the advertisement activities, as well as reducing the actual cost of such advertisement. Furthermore, a significant positive correlation was observed between the use of social media among these enterprises, as well as the scope of operation and field of enterprises. But negative correlation was also observed in within the number of employees and enterprises age, and also no correlation was found in respect of the place of enterprises, in the north or the south. So based on this discussion, or based on these findings, this study suggests providing trainings and guidance. As you know, one of the findings was that enterprises stated, or managers or owners stated, that they don't use social media to increase sales to existing customers. So further guidance or training can help in these enterprises or these managers or these owners, and by the government, policymakers, supervising authorities, to achieve optimum use of adopting these social platforms for serving the business goals among these enterprises. Yes, that is the end of my presentation. Thank you.
Dr. Mujahid, that's a very wonderful presentation, very interesting. Yeah, is there anyone with question on this subject matter? Anyone with a question, please, regards the presentation of Dr. Mujahid? Okay. Dr. Mujahid, I got a little question to ask regards
Yes,
the
sir.
presentation.
Sure.
I believe the whole this subject you discussed is actually the research is carried out in Yemen, I believe.
Yes, sir, in Yemen.
Oh, all right. So I want to know, is the social media being regulated at Yemen?
Not at all regulated by the government and policymakers. Well, you would find some attention paid towards that, but not exactly. For example, comparing Yemen to neighboring countries like such UAE, Oman, and Saudi Arabia, there is a significant difference in such a regulation dedicated to the social media use. I mean, by individuals, not exactly by enterprises.
Okay. Thank you very much. And lastly, you did say that in the end of the research, you did say there is low patronage of the social media by the SMEs. So now, what is the government doing, or what are the individuals doing what's the government doing, or those involved to encourage the use of social media? Because I believe with the use of social media, there will be a large coverage towards ascertaining a lot of customers. What's the government doing, or those in charge doing, to make the owners of the SMEs patronize the social media in order to have a larger or a more diverse customers?
Sir, training is the main method to make enterprises or their owners, or especially more particularly investors or small entrepreneurs, to realize the benefit that they can gain from effective use of social media by spreading news or awareness. Because while they were questioned, they did not give the impression that they used to increase their sale and investments. The behavior of the customer was not one of the goals of adopting social media. So if I was trained as an entrepreneur, if I was trained how to use social media effectively, definitely I will gain some output by the effort that, or the cost that I would spend on social media on attracting people. It could go on sales, opportunities, prices, things like that. So 100% possibility is huge that I would attract customers to my activities through using social media platforms.
Okay, thank you very much. A very wonderful presentation. Thank you very much.
Thank you, sir.
Yeah. So when Dr. Mujahid was making his presentation, I observed another participant came in. I think his name is Dr. Grozi Delchev from Trachea University, Bulgaria. Are you there, sir? Dr. Grozi Delchev, are you with us? I can see you on the participant list. Dr. Grozi, I believe he isn't that close. So I don't think anyone is on the list that has joined so far. So I think I should go ahead with my own presentation, I believe. Okay. So all right. So I'm Abdul Ghaffar Muhammad from Nigeria. From National Open University of Nigeria. The subject matter of discussion is going to be Treasury Single Account Policy in Nigeria, the performance, bottlenecks, and prospects. So can you give me some few seconds to share my slides? Very unfortunately, I'm using my phone. So you please can give me that period to share the slides. So can you see my slides?
Yes, sir, visible.
Okay, so my name is Abdul Ghaffar Muhammad. The co-authors are Ramatu Abdullah Aliyu, Abdurrahman Muhammad, Usman Yusuf Atoko Umar Hamis, Hussein Abdul Qadir, Muhammad Lawal Sani, Muhammad Sani, and Zainab Sindagaw. The subject of discussion is, like I said, Treasury Single Account Policy in Nigeria. That is the performance of the Treasury Single Account, the performance so far, the bottlenecks, that means the limitation and the potential prospects in Nigeria of the policy. Treasury single account as it is actually a consolidated set of accounts that's actually designed by countries in order to make them have access to controlling their cash or their cash, because mostly in developing countries like Nigeria and less privileged countries or low income earning countries like Nigeria, there are a lot of corruption that goes place or that is being undertaken by people at privilege, that is people in office. They may try to maintain several accounts at various deposit money banks just for corruption or just for diverting public funds. So because of the widespread amount of corruption in Nigeria tried to adopt the Treasury single account. So now the big question now is, what is Treasury single account? Treasury single account, as the name implies, is more of a consolidated account that is being designed by the federal government under the recommendation of the World Bank to consolidate their account. That means all monies, all transactions of receipt and payment goes into that account. The whole essence or the whole objective of that account is to be able to control financial leakages and of course pilferages and widespread corruption in Nigeria. This Treasury single account was actually introduced by Governor Obele Jonathan. That is the president that came before President Muhammad Buhari we have today. He introduced the Treasury single account, I think, in 2014, where he tried to put the Treasury single account or test run the Treasury single account in about 47 ministries, departments, and agencies in Nigeria. So, but the whole policy kick-started fully in 2017 under the current president, Muhammad Buhari, because it was seriously observed that ministries, departments, and agencies in Nigeria were operating several accounts in several deposit money banks, which the government is actually not aware of. Of course, the source of income of these ministries, departments, and agencies is actually from the government. But very unfortunately, the government does not have access. The government does not have control. In fact, the government does not know how these ministries, departments, and agencies use this money. Most oftentimes, these monies are often stolen by very unscrupulous public officers in Nigeria. I'm not trying to generalize, but a very significant amount of these people try to steal these monies. It is observed that before the Treasury single account adoption in Nigeria, you'll find out a single ministry operating more than 1,000 sets of accounts, like 1,000 different sets of accounts, maintaining this account by several deposit money banks. So now, the question now is, there is no control in this kind of thing. And government continue to borrow from IMF, go to China, go to India, and borrow money, while it has money in custody, but this money is being held, like I said, by these corrupt officers. So due to this limitation, I may not be reading from the slides because what I'm saying is actually a summary of the whole presentation. So the government actually observed that there's this widespread corruption. So World Bank now gave the government, why not try to ensure that you have a single account whereby all money received from the outside or from the inside goes to that single account. And any monies and all monies that are going to be disbursed in terms of payments also comes from that account. And of course, the theoretical underpinning of this study can also be seen from the Nigerian Constitution of 1999, which stipulates that there should be all monies received by the government, and of course that's going to be paid from the government, should actually go to a consolidated account, which is called the Federation account, I believe. So, but very unfortunately, through the years, the politicians and of course people in privileged offices flagrantly abuse that provision of the Constitution and maintain such accounts. But we thank God, because with the coming of the President Muhammad Buhari of today, he tried to ensure that this Treasury single account is fully adopted. And with the adoption of the Treasury single account, it was observed that that ministries, departments, and agencies across Nigeria maintained over 20,000 separate accounts in these deposit money banks. And that is why you observe, even in Transparency International Index of Corruption, you observe that Nigeria always continue to come either number 3, number 1, they are actually the highest. Even though we are blessed with a very good number of resources, whether human or capital, but of course we continue to be, I'm sorry to say, one of the poverty-stricken countries because of widespread corruption, very much widespread corruption. But the current administration has adopted the Treasury single account, and hence the corruption has actually gone to a very large extent, has actually gone very down. So the methodology of the study is basically qualitative in nature. Like we got is qualitative in nature. Qualitative research design was adopted for the study to enable us gain insights into the performance, bottlenecks, and prospect of Treasury single account in Nigeria. And like I said, the work is actually theoretical in nature. There was actually no quantitatives done because it was actually just drawn from secondary data that are actually qualitative. So now, going straight forward to the performance of Treasury single account, I'm going to read straightforward. What are the advantages Nigeria gained from the adoption of Treasury single account? The first advantage is mitigating the quagmire of fragmented account. Now we do not have those number of accounts, several number of accounts maintained by ministries, departments, and agencies where unscrupulous people can just go steal from this account and just go scot-free and live live wasteful life in Europe and to mention but a few. The second one is welfare maximization. Nigeria stand to benefit or save about 109 billion naira every month because of the adoption of the Treasury single account. The second one is effective and efficient cash management. Now government knows what comes in and government knows what goes out to this ministry department agency. Hence, the unscrupulous people are put to a serious disadvantage. It eliminates fraud and other sharp practices, like I continuously say. And of course, audit becomes easier because audit is going to become easier if we know where the monies are. The Auditor General of the Federation can easily query any suspected transaction not known. But in the past, before Treasury single account, there is no way for us to be able to, or for the people in the audit to be able to know what actually, well, what the disbursed money by the federal government was actually used for. So going to the bottlenecks of Treasury single account, that is the limitation of Treasury single account. As good as a policy is, no matter how good a policy is, it may have its own limitation. This limitation, of course, may be man-made, and of course, this limitation may actually be natural. But notwithstanding, the following are the limitations of the Treasury single account. Since the passage of the Treasury single account in 2017 fully by President Muhammad Buhari, there has never been audit of the Treasury single account. And this is actually a very big slap, a very big blow to the adoption of the Treasury single account. This is, of course, is criminal in nature, because I remember in 2017, when the Auditor General of the Federation was actually called to tell the National Assembly what is actually available in the Treasury single account, which of course is an account, he was actually unable to tell us or tell the Nigerian public what is in the Treasury single account in terms of cash. He was unable to do that, and that is actually a very blow. So you can see a policy that is meant to actually bring about probity and transparency has actually been defeated to some extent with this limitation. The second one is the non-passage of the audit bill. There was no passage of the audit bill by the National Assembly, and this does not give the Auditor General or the Audit Office the autonomy, because non-passage of the audit bill means that the Audit Office or the Auditor General's Office is actually not autonomous to actually investigate the CBN where the Treasury account is actually domiciled. The second one is non-support and opposition. Of course, what do you expect from unscrupulous politicians? Because they know the Treasury single account is going to give them disadvantage, is going to put them to this corruption. There will be no embezzlement, misappropriation, and all that. They try to actually frustrate the policy. They do not support the policy. They try all their means to ensure that the policy does not even hold. One, you see, another issue I actually forgot in the presentation is Treasury single account under the guidelines of the International Monetary Fund ensures that if monies are to be held by commercial banks, that is deposit money banks, those commercial banks have to operate a zero balance. So, of course, before in the past, deposit money banks were actually benefiting so much from government deposits, up to the extent that government continued to pay interest on its own money. And when those banks get distressed in Nigeria, they go and dip their hands into government money. Of course, the government doesn't even know where the money is in the first place. So the commercial banks itself, they go and dip their hands into government money. So, but with the adoption of the Treasury Single Account, this has actually come, this actually ceased to exist. And that is why you observed some commercial banks actually went into liquidation due to adoption of the Treasury Single Account. So, and going forward to the prospect of Treasury Single Account in Nigeria, Treasury Single Account, as it may sound, or as you are seen through the discussion, of course, has a lot of prospect or has a lot of good future in Nigeria. Because if the politicians actually hold or try to be sincere regards the adoption or the execution of the Treasury Single Account, of course, in Nigeria. So if the prospect here is, there must be training of the Auditor General's office, because this, we're talking about an account that is being operated for a whole federation, for a whole nation, a single account or a set of accounts. And you know, now we are operating, we have, the whole world is becoming global, technology is actually overtaking the affairs of of everything. So there has to be training of the staff of the Auditor General's office to be able to handle such a very cumbersome and complicated account like the Treasury Single Account. So the second one is, it should be the National Assembly. There should be some behavioral or a paradigm shift of the politicians. They should try to change their behavior. They should try to be sincere to themselves and know that these monies are actually not meant for personal consumption, but for growth of the nation. So these are the prospects. That means this Treasury Single Account has to be introduced along the fiscal sunshine bill, which means that government should be able to know, or the Nigerian public should be able to know what comes in, and should be able to know what comes in and what goes out. And issues of budgetary and extra budgetary allocations should be made as public as possible if Treasury Single Account has to be has to see the light of the day. I think, thank you for listening to my presentation. I don't know if there's any questions so far.
Mr. Mohammed, is a very nice presentation.
Thank you very much, sir.
Okay. And is there any dip in the quantum of expenditure in the single treasury account compared to earlier years?
Sorry, I didn't get the question.
No, whether the amount of expenditure spent is came down on the single treasury account compared to earlier years, anything?
Well, regards the question, that is one of the major limitations I actually made. I actually tried to mention. There was no public statement on the amount of expenditure that was spent from the Treasury Single Account. Because when the Auditor General went to the National Assembly, he was asked to tell the Nigerian public what actually came in and what was actually spent, and he was unable to give the public the answer. So there was no publication regards that effect, sir.
Okay. Is it not part of our budget?
No. It's not actually part of budget, actually. It's not a budgetary something. It's actually in an account that tries to consolidate all revenues that accrue to the government and all payment that goes out of the government. The budget is actually done by the presidency, actually. It's not part of the budget, sir.
In India, we have the concept of Consolidated Fund of India.
Okay.
Okay, where all the revenues of the government gets deposited in one, and from that only it is spent, but it is allocated through the budget process every year.
Yes. You know, the budget is actually what is actually designed by the federal government in the beginning of the year. So here in Nigeria, there are sources of income that actually comes into the government. These sources of income are usually, like, the budgets are being prepared by the presidency or the executive arm of government and the ministries, departments, and agencies. Like you rightly said, that's also the practice in India. But what of the funds that actually goes from revenue generating agencies like the NNPC, which is the oil, because Nigeria actually relies on oil, and these oils come from buyings from the international public and all that. So the government does not actually know what comes in. NNPC that is actually maintaining the account, and it is maintaining several accounts. So government does actually not know the total amount that is actually generated.
Okay, thank you.
Yes. Thank you very much, sir. Any other question regarding?
My question
topic,
actually is less related to your topic, like to the presentation. But as you know, the result of the decision made to make it as a single account was the spread or the widespread of corruption. So my question is, how politics is involved in like the widespread corruption?
Yeah, thank you very much for the question. Politics is so much involved in the widespread of corruption in Nigeria because the politicians are often at the helm of affairs of the various ministries. And if there is any allocation to the ministries, the ministers are the ones that receive this money. Instead of them to use this money for welfare maximization, they try to divert these monies. Government does not disburse this money to some other individuals, but to their own political appointees. So I think that's how politics is actually involved in the widespread of corruption in Nigeria.
I previously conducted a comparative study between 5 least developed countries, and from Africa, Rwanda was included in my study as an underdeveloped country. So if I ask you to compare Nigeria and Rwanda in the corruption and the policies, what can you tell me in this comparison?
Honestly, I wouldn't be able to say anything because regarding the question, because I've actually seen the corruption index, because there's this we use for comparing very high corruption spread across countries. I can speak for Nigeria, but I really don't have information regards Rwanda, so I don't know
is it far away from Nigeria? I thought you'd be close.
No. We are actually very, very, very far away. Nigeria is on the west of Africa, and Rwanda is on the east.
Yeah, it's next to Uganda.
Yes.
Well, thank you. I just wanted, out of curiosity, I wanted to know some aspects. Thank you very much.
Thank you very much. I appreciate Dr. Mujahid. So, do we have any other? Do we have any other person on the queue right now? I can see Dr. Froilan is available. Is that correct?
Yes, but I'm not going to present. I'm just observing. Good evening.
Okay. So who is to present your work, sir? Anybody?
I think nobody.
Okay. No, nobody. Okay. Maybe we should try and mention their names and find out if they're actually available. So we have a list of people that have not presented yet. We have Professor Vasilina Kanatova. I believe he's not around. We have Ramatu Seju. I think she's not around too. We have Dr. Krishna Kant. Also not available.
No.
Dr. Mutallin Rahimov. I don't think also not available.
Yeah.
Dr. Grozy Delchev. He was here now. Okay, so the last person is Seidat. I don't understand, it's not written in English, but Dr. Seidat, are you available, please? I I don't think any other person is available, sir. So over to Mr. Ali, who is the observer of this presentation. What do we do, sir? Okay, Dr. Ali. Okay, I believe he's not. Dr. Ali, can you hear me? I
Yeah,
can observe you are the
we can log
you are
out.
the observer.
It's finished.
Okay, okay.
I want
Okay,
to
okay.
thank to everyone for their presentation. Your
Yeah.
participation certificates will be sent to you by email within few hours. Stay well.
Okay.
Have a nice day. Thank you.
Thank you very much. Dr. Karupia, thank you for knowing you. I hope to see you one day in India. Also, Dr. Mujahid, I also wish to see you someday in Yemen. Bye-bye.
Bye. Have a
Thank
nice
you.
day.
Thank you. Bye-bye.
Stay safe.
Yeah. Thank you very much.